This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, February 5th, 2016. Euro dollar. So a key break in the euro this week with the market taking out critical resistance, range resistance at 110.60 to open the door for a fresh upside extension. At this point, given the 350-point consolidation that we had seen in previous weeks, this projects a 350-point move to the upside towards 114.10 over the coming sessions. But overall, the longer-term downtrend does remain intact, so expect to see any rallies up towards the 114 to 115 area to be very well capped. In the interim, while the market is pressured to the top side, any setbacks should now be supported by that previous resistance, now turned support at 110.60. Sterling dollar. So cable continues to extend gains and this correction out from those recent multi-year lows at 140.80. At this point, there is still room for additional corrective upside towards the 148 handle, which represents a key 61.8% fib retracement off of the December high to recent January low move. At this point, though, any rally should be very well capped to the 148 area in favor of a meaningful lower top and resumption of this broader underlying downtrend. Dollar yen. So dollar yen has done a good job of being very well capped into rallies towards 122, with the market pulling back sharply this week and now within a stone's throw of retesting that recent January 20th multi-month base at 115.97. Look for a break below 115.97 to open the door for the next major downside extension in this market towards the 112 area further down. At this point, any rallies should continue to be very well capped, with only a break back above 122 to compromise the bearish outlook for dollar yen. Euro Swiss. So despite some recent pullbacks in trade over the past couple of hours, the market remains pressured to the top side following a critical break over the past several days above that previous resistance from September at 110.50. The breakout now suggests that there could be room in this market to extend up towards the 114 to 115 area over the coming days. As such, look for any setbacks that we do see to be well supported in the 110.50 area, some solid previous range resistance now turned support. Aussie dollar. So Aussie has seen a really nice correction out from those recent multi-year lows at 68.27, with the market extending up to as high as the level of 71.65, 71.66 on Thursday, ahead of this latest minor pullback. But overall, the broader downtrend here remains intact, and any additional rally should be very well capped ahead of the 73 area by 72.65 ideally, which is a key 78.6 fib retracement off of that recent critical 73.85 high from December down to the recent multi-year low from January. Dollar CAD. So dollar CAD continues with its intense correction out from recent near 13-year highs at 146.90, but there is still room showing here for additional corrective pullbacks towards the 135 area, with the market coming into some critical rising trendline support. At this point, though, if we do see a move down towards 135, look for the longer-term uptrend to resume, with the higher low sought out in favor of the next major upside extension back towards and eventually above 146.90. Kiwi dollar. So Kiwi has seen a nice little bounce out from recent support at 63.50, with the market trading up to as high as about the 67.48 area, 67.50 area on Thursday. But again, any additional upside here should be well capped, with the market confined to a broader downtrend, with a measured move objective in the 67.70 area seen ultimately capping gains. Really, though, only back above 69 here would compromise the bearish outlook for Kiwi, so expect to see a bearish reversal sooner than later in the days ahead, taking us back down to 63.47 and then towards that 2015 multi-year low at 61.30 from August of 2015. SPX 500. So the S&P 500 has been correcting a little bit and consolidating a recent trade after breaking down to fresh multi-month lows at 1811. At this point, though, the rally is classified as a corrective rally, and though it could still extend some more, should be very well capped below previous support, now turned resistance at 1993. Look for a lower top in favor of the next major downside extension below 1811 and towards the 1700 area further down. Ultimately, only back above 1993 would compromise the current newly adopted bearish outlook for the S&P 500. Gold. So this impressive recovery rally in gold continues as the market continues to show signs of a meaningful base in place by those multi-year lows from 2015 at 1046. At this point, look for additional upside in the days and weeks ahead towards the 1200 area, with the market seen back towards the critical October highs. Any setback should be very well supported now towards 1100, with only a break back below 1090 to really take the immediate pressure off the top side. Clearly, there's a higher higher low now in place, and the market should be focused on a retest of 1192, that October high, over the coming days and weeks.